Welcome back to Today Trend. In this video, we'll explore the impact of social media on stock market trends. By the end of this video, you'll understand how social media influences investing and how to use it effectively. Social media platforms like X have become influential in shaping stock market trends and investor sentiment. Traders and investors use these platforms to share news, opinions, and trading ideas. Hashtags, trending topics, and online communities can create rapid shifts in stock prices, as seen with meme stocks like GameStop. While social media can provide valuable insights and real-time information, it's essential to verify the credibility of sources and avoid following hype blindly. Using social media effectively involves following reputable financial experts, participating in investment communities, and staying critical of information to make informed decisions. But remember, everything on the mentioned sites are overwhelming. Stick with your Today Trend community to stay up to date. Imagine you follow a reputable financial analyst on X or YouTube who shares a detailed analysis of a promising biotech stock. You conduct further research and decide to invest based on the information and your own analysis. Think of social media like a public square for investors. Just as a public square allows people to share and discuss ideas, social media platforms enable investors to exchange information and insights. In summary, social media can influence stock market trends and provide valuable insights, but it's important to verify information and avoid following hype. Stay tuned for our next video on investment newsletters and blogs.